What up, everybody? Good morning. Welcome to the morning show here on Stock Market TV. We missed you guys yesterday. The original plan was to not do a show yesterday or today, but we just could not stay away for 2 whole days. That would have been insane. So here we are, nonetheless. Welcome to the show. We got a lot going on. Obviously, volatility, earnings, things, charts. It's all happening. We'll have Brian Lund on the show today at 9. He's a fan favorite. Joins us every month. And Sean McLaughlin will stop by in a little bit as well to talk options. So what up, chat? How we doing? Luke, good to be back. Thank you. Harminder Dawson, G, Working Man, William, Phil, Mary, Curtis, Zach, Ravi. Did I miss anyone? Probably. Chef. What's going on, Chef? All right. Let's get the show on the road here. Bring on Steve and JC. Here we go.
All right, we out here. We're really doing it. This is quite the surprise. I didn't think that we'd be here doing this today.
Yeah, what happened to not doing a show today?
Well, so the original thing was that JC was going to be out and I was going to be out.
Yeah.
So we thought no show, right? But
you had flight stuff?
My flight was canceled yesterday and I'm flying out in a few hours. So I'm here. And I knew you were
my
here.
Sushi reservations aren't until 12:30. 12:30. I'm gonna get my uni on. I'm gonna get a little of that wagyu, a little how you doing there. You know how they put like that little strip of like green onion on top of the wagyu. Woo! Man, I've been thinking about it.
You going with Fami?
I am not going with Fami. I am going with
Ricardo.
And Rick's mom.
Yes, I've heard.
Cool.
Yeah. Live in presence directly from Mexico City. So that's going to be a lot of fun. And then I am going to do a little arguing and yelling with our good friends Josh Brown and Michael Batnick.
Which is always great.
And we're going to go tear it up at dinner. We're going to some new spot. You know how it is. You know how these guys are. They're bougier than me when it comes to this stuff. And that's saying a lot.
Definitely. Yeah.
Before we get into the state of the markets, this has nothing to do with these guys or anything that I'm doing today. But like, seriously, guys, if politics makes you so angry, like I understand, like it makes you so angry, we don't care. We don't care that politics make you angry. It makes you sad. Oh, it makes you sad. We don't care. We don't care what you think about the president or the president or 2 presidents ago or the next president. We don't give a shit. Right. We worry about like important things, like things that actually matter, you know, particularly to the market. And who the president of the United States is just ain't that. You know, we talk about how it's, you know, a Republican is good for taxes and the Democrats, you know, they want clean things and, you know, right. And the market doesn't care.
Yeah, we try to always bring it back to that. Right. Because that's all we really care about.
Yeah, and if the market doesn't care, I certainly don't. So, you know, you could be angry and we don't care. Go ahead, be angry. Go knock yourself out. You know, that's how I see it.
I have a very hard time caring about political opinions, especially my own.
Oh,
actually.
Can you imagine? I have friends that live in Washington, D.C. and they're not into politics. And they're like, dude, it's terrible, bro. It's terrible.
Tough.
Oh, all right, let's get into actually important things that really do matter in this world, like the market. Let's go. All right, ladies and gentlemen, we got a lot to talk about today. Dow futures are up 160 points. That's above 39,000, trying to get back above 40. That was pretty quick. Nasdaq 100 futures up over 1% today. That's 200 points for the Nasdaq 100 futures. S&P up almost a full percent. That's 43 handles to the upside. 52.70 on the S&P 500. 30-year bond futures pretty muted today, down a little bit, down to 122. 10-year note futures pretty much flat. Crude oil up 40 basis points, pushing 76 back in crude oil. Copper still holding below 4, flat on the day here at 395. That's a big one. Gold ripping again, 24.50, up 0.75%. Silver up 0.5%, still down towards 27. Volatility index, which I want to talk about, is back to 26. It was just at 65 just like 3 seconds ago. And over in funny money land, Bitcoin, hello, up 6% this morning. That's 3,200 points for good old BTC. Ethereum also up 7%, 170 points to the upside for ETH. Solana leading the way higher today, up 9% for finance. Still sucks below 500 despite that 4% rally this morning for Binance. Total crypto market cap, Spencer Israel, 2.00 trillion.
All right. We're back above board. We're back above 2.
Back above 2. How long before 3? How long before we see 3 trillion crypto market cap? Go, Strazza.
I don't care right now, right? Because what we have to talk about is we said there would be an epic oversold corrective bounce. Did we get one?
Yes.
We got one. It was epic.
It was pretty epic.
I don't know.
Do you want to check this
epic? Volatility got squeezed out, right? You had big bounces. Yeah, it was pretty epic. No?
Stocks are at the same level they were at 2 days ago.
Yeah. You got the bounce, then you got the sell-off, and now you see if they come in or not, right? Like, do they come in and buy the dip, or do they roll them over and make new lows?
So you didn't get the bounce yet that would be commensurate with other corrective bounces in the past. Right, so we're running studies now, but this is nothing.
Also, we're in the middle of a bull market. A lot of these bounces that you're trying to refer to are coming at the end of bear markets.
No, we're doing corrective bounces in bulls.
Got it. Okay, got it.
Off of the lows from October last year. Look at the way the market came off the October lows last year. It was incredible. You couldn't doubt it at all. It was a clear.
I find it hard to compare.
I'm just saying we haven't gotten a bounce yet. I'm not saying that it hasn't. Maybe it just hasn't come, right?
But what happened in October was seeing a month long of breadth improvement underneath the surface. There was a lot more happening underneath the surface. No. We were coming off new cycle highs in the new highs list.
The breadth improvement last year happened in a handful of days. We fired off the lows. Breadth was getting scary bad. I remember getting concerned and feeling more cautious because
breadth bottomed out at the beginning of October. The market bottomed out at the end of October. There was breadth improvement all month.
No, it wasn't.
This is different, Strazza. I get what you're saying. I'm with you. I'm just not going to agree that it's a valid comparison to compare the past week to October.
Forget any of the studies or the data, whatever. What I'm saying is you typically should get a sick bounce off of the selling that we had. We did not get one. We're on rollover alert. And we might not
get that much selling.
Selling's been bad, man. Yeah.
Was it?
It was one day. It was one day, right?
What?
I'm talking
about the selling of the past few weeks.
I
just don't think the selling was that bad to deserve this like epic bounce. Like, I think we got the epic bounce for the little bit of selling that we did see. Like, I don't think that it's fair to compare the bounce to where we've seen a lot of selling. Now let's focus on the areas that got the most selling, because Strazza's like, I don't know what you're looking at, JC.
I mean, right. XLK almost oversold, just about oversold. A lot of things got oversold. So
slide 2, Spencer. Slide 2. This is important. And this speaks to exactly what we're talking about here. Here's our friend of the show, Eric Balchunas. First of all, I love that Eric Balchunas is a friend of the show, right? He's the man. So the fact that we have a guy like this who's a friend of the show, fantastic. Kudos to us. Mm-hmm. Anyway, Eric coming out. He's the man when it comes to ETFs. He really is the man. And here he is talking about the new filing from iShares. This is BlackRock for the NASDAQ Top 30 ETF.
Wow. I mean, this has got to be it for how thin the market was and how big the leadership was here. Because what we've seen over the past year now, you can lever up on individual stocks, like the biggest stocks in the market, like NVIDIA, Apple. They got their 3X triple levered funds. All those launched. You can buy just the top 7 biggest with the mags, right? You can now buy the 30, just the 30 biggest. And mind you, this is a very small index. There's only 100 stocks in it. So you have that option too.
So I did some math because this is what I do. I do late night math while I watch my conspiracy videos and documentaries. Man, I saw some great documentaries about bridges in New York City the other night. Man, I fucking love bridges.
Don't tell Spencer because he already hates going over them.
Dude, I crossed the bridge in the rain. Actually, now it's a tunnel.
All the stuff about the High Bridge up in the Bronx. This was from the 1850s. The High Bridge is the dopest bridge. Seriously. I used to think it was the Queensboro. The High Bridge is so dope. Used to have, whatever. The point is that this seems a little late here, right? I did some math, and it's about 52% technology, according to Standard & Poor's, right? But when you add Amazon, Google, Tesla, and Meta to that 52%, it turns into 88%. Just to put things into context for those who haven't done the math. But I did it. Spreadsheets and everything, Strazza. You'd be so proud. It's at closer to 88 if you include those other four, which I think you would agree you should, right?
Yeah.
So here we are. And then go to the next slide and then show kind of what this means, right? So now in their infinite wisdom, the ETF companies think now is the time where investors want to put money into the largest 30 stocks. Not 10 years ago, now. Okay. Technology relative to the rest of the market making new 10-month lows. Strazza, what does that mean to you? And are you surprised it's 10 months? That's a lot longer than I thought.
These stocks are done leading for now.
Next slide, Spencer.
It's clear as day.
Next
The relative trend that had been in favor of large cap tech stocks, it's not higher anymore. I think it's turning lower. We need confirmation, but this is a new downtrend for me.
Does this mean anything to you at all?
Yeah, we talk about this like every other day.
Do you think that I am overstating the importance of this chart, or you think that I'm spot on?
No, it's been important all year, since last year.
Go back to the shorter term chart. What about this momentum divergence? Strazza has a particular fondness of the 14-week RSI. Am I right there? Am I right?
Not really.
No,
I always say that. It's fine.
You're the one who tells me that the weekly divergences are more important than the dailies.
That's Ian who tells you that. I don't think I agree. But yeah, I agree. The dailies are pretty much to be ignored, and the weeklies are too slow. So there you go.
Why don't you find a time horizon in between those?
You know what I've been doing? So
internally, like a 3.5 day RSI.
No, you know what I have on my charts now? I got the 14-day, and then I want something faster. So I have really faded. You could barely see it, but it's overlaid with the 14-day. I got the 9-day. So I'm trying to see if something rolls off the 14-day, I'll pick it up in the 9-day soon. I'm experimenting with it.
Wait, JC, you missed a key piece of context for that NASDAQ top 30.
Oh,
ETF.
Tell me, please tell me.
There's also an X top 30 NASDAQ 100 ETF. So
and are they coming out at the same time?
They're not coming out. They just filed for them. That's the kind of step one.
They're coming out.
Okay, all right, they're fine. They're coming out, but I don't know when. But they're going to come out together. Is my point. Top 30, X top 30. So get the best of both worlds.
All right. So does that eliminate that sentiment? It's a great call there, Spencer. Here are Spencer Israel, chief ETF correspondent.
Yeah. Ooh, are we good?
Well, I'm asking you, Strazza, does that eliminate that sentiment, considering they're going to add both?
Sorry, I was reading the chat. I missed this.
All right. There's two ETFs that iShares BlackRock filed for. NASDAQ top 30, right? NASDAQ 100 top 30, NASDAQ 100 X top 30.
Oh.
So you get the top 30 or you get the bottom 70.
All right. So that makes this news better. Right? It's not sentiment.
Yeah, it's not sentiment. Still the top though.
Hold on.
Strazza?
I'm interested in the BABA chart too, Zach. I think things might be turning for China still. Am I getting too excited here?
Yes. But
do you call this relative strength since last week? Would you call it relative strength?
Yes.
I don't know. Right?
I think you can. I mean, I think you need to see more than a few days.
Hey, that's what I was about to say. Thank you.
Phil Blotsky said, "I'm being a sour Susan," which I've never heard before, but I imagine is similar to a Debbie Downer. And I'm not. I'm just in keep money mode, Phil. And I'll let you know when I'm back in get money mode. But for now, I'm trying to keep my money, man. Not being sour.
Sour Susan, sour Strazza. I got one for us. Throw up slide 5. So this is an interesting one that I've been looking at over the last few days because I'm like, man, VIX tripled overnight. Never seen that before. We're quoting VIX and percentage changes. That doesn't happen. Hopefully that's the last time we do that.
This chart, man,
what?
Unbelievable. Wow. That was some spike. Really was.
Yeah, but the futures didn't confirm. So talking with some math majors, of which I am not, the calculation of the VIX, there was some fugazi numbers out there, way out there that, kind of shifted that index. The futures never confirmed. So you don't trade the VIX. These are not tradable instruments. It's just a math calculation. You trade the futures contracts. The futures contracts never got anywhere near 65. Actually peaked at 37.
Did you, when you used to dabble in more speculative and derivative markets, did you ever touch these things, these sorts of instruments? VIX futures?
Not really, to be honest. I'm trying to think back. Like even in my most aggressive days, I don't remember ever putting on a VIX trade in my life, as a matter of fact.
I've never touched VIX futures. I've never touched a lot of futures, but I've never even thought about touching VIX futures.
Yeah, and I've traded all kinds of stuff.
Yeah.
I have never traded VIX or a VIX instrument that I can think of. I'm pretty sure I've never have.
Did you ever try to
20 years ago, but like I don't even think they existed yet.
You never even tried to like hedge a portfolio using some sort of, some people go too far and they'll get into like VIX calls and say like that's a portfolio hedge, and you never did.
No, I mean, listen, I get it. I don't have a problem with it if that's your bag, but that's not my bag, baby.
Yeah.
If I'm gonna hedge a portfolio, especially if options are cheap, I'm just gonna buy puts on indexes or on individual stocks or something like that. That makes more sense to me than a VIX instrument. But what do you think about the futures contracts not getting anywhere near the index?
Croquetas, pastelitos, and cafecito. That sounds like my kind of morning. We like that.
My parents were just here a couple of weeks ago for my daughter's birthday, and they brought me Versailles. They brought me pastelitos, croquetas. Oh,
so good, man.
They brought me mangoes. My mom brought me mangoes.
So I wonder if the move is probably for them. They probably get it in the Miami airport.
Yeah.
Right? So take it. So good. I'm going to start doing that.
Yeah,
maybe I'll do that.
All right. So no comments at all on the VIX. You don't care.
No, listen, massive spike. But like you said, it came in, wasn't confirmed by the futures markets. It's not that I don't care. I see.
All right. So here's the World War III trade, slide 6. Spencer Israel. How do we feel about this?
Why do people keep saying that? World War III, isn't that?
Because once a year, Steve, once a year, tensions flare up in the Middle East, and we think World War III is upon us. Pretty much once a year, like clockwork.
Would the Middle East really start World War III? Wouldn't you need like more important countries?
First of all, I was being facetious, obviously. Okay. In case you didn't catch that. Okay. Lockheed Martin, new all-time highs. How are we feeling about that? Just another industrial stock leading the way higher, or World War III around the corner?
Yeah, I don't know.
This isn't the only one, though.
Chart looks great.
It's not the only one. Norfolk Grumman.
Not the only defense stock that looks like that.
What else?
What is the best defense stock?
Also, doesn't Lockheed also? Wait, who's the company that? No, it was Rolls-Royce, right? Rolls-Royce is a defense stock, right?
Rolls-Royce makes like engines and stuff. Like the car business is like the tertiary.
Right.
They do like engine stuff, so they could be.
But I think they make
defense.
But I think Spencer's right. Similar to like BMW, they make like turbines and like industrial war engines.
Yeah.
Right.
Okay.
So Lockheed Martin. So how are we thinking about this? Just a relative strength here, or something bigger?
I would say I don't own defense stocks. It's not really for me, but I do own GE. So
Raytheon has been making new all-time highs, right?
Yeah, they're fine. Look,
all right, throw up the industrials.
Like you guys said,
industrials index there, Spencer.
These are story stocks. I hate the defense stocks because it's always some nasty story on the internet. And oh, look, the defense stocks. Oh, we're gonna go to war. It's like, if you like rooting for those kinds of things, cool. You should definitely own these stocks. However, if you zoom out at the relative trend in any defense stock index versus the broader market, all these guys do is underperform over the long run. So it's kind of like, for me, this is like staples. You could have them.
What about this? How do we feel about the? How do we feel about this one?
This is a fear trade. It's a fear trade. It's for scared people.
Industrials?
Aerospace and defense.
Yeah, I'm talking about industrials. We're moving on.
I don't know. Lower bounds. Sell puts if you want. I wouldn't right now, but go crazy.
Do you think that a breakdown here would be a big bearish catalyst for the overall market?
Yes, definitely. You don't want to you don't want to lose these kinds of groups, right? And XLK, like we're looking at you too. It's a huge level right there. Low one.
By the way, RTX, for those keeping score at home, outperformed the S&P 500 for 20 years.
Sure.
From the early 90s through 2011, has been an underperformer since then because Raytheon doesn't have any technology and the S&P 500 is loaded up with technology. So it's been an underperformer over the last 10 years. So I just want to fact check Strazza. They don't always underperform.
First of all,
sometimes they outperform.
I got a lot on this. I got a lot on this. Don't do this, okay? Because it's not what I said. I said any aerospace and defense index. Sure, you could pick one stock that's been good. Absolutely, in any group. So naturally, not what I said. However, these are tech stocks. Probably the biggest tech stocks in the world. They make like fighter jets and bombs and things.
So what's not a tech stock?
Not tech.
Are energy stocks tech stocks too? Then
some of them. They're all tech stocks.
Everything's a tech stock.
Any good company is innovating and using technology.
Are we a tech company now too?
Maybe it's not the right tech for aerospace and defense. We're a tech stock, sure.
All right, so aerospace and defense outperformed the S&P 500 since the inception of the ETF. This was back in 2006. So this is aerospace and defense. I'm not cherry picking a stock. Aerospace and defense as a fund since inception outperformed for the first decade and a half of its existence, steadily outperforming the S&P 500, and that came to an end right at COVID. Ironically enough, right at COVID is when the defense stocks started to underperform. Wouldn't have guessed that.
2019, right? Just steady grind lower. So I'm sorry, and it's been 6 years of underperformance. So yeah,
it's been less than 5, and it outperformed for 15 years since inception. So again, they don't always underperform. Strazza,
I can't make money based on what was happening 15 years ago. So I'm not really thinking about it the way you are, I guess. I got to make money based on today's trends.
There's a time and a place, Strazza. Sometimes they outperform, sometimes they underperform.
It's been a long time.
There's a time and a place. Excuse me, Mister. These are too boring. Aren't you the one talking to me about real estate all the time now? All of a sudden,
I saw that tweet yesterday, Steve. I saw that.
It's hard for me. And I know. And I said that if you watch the Hot Corner video yesterday, I said, guys, I usually call these stocks boring, but they just look so good. And, here's the thing. You got to be careful. When you see a good chart and you're looking at your price target, measure up for how big of a move it takes to get you there. Some of these real estate stocks, there's such low volatility that the base just completed, right? But instead of something like Coupang or, one of these techie stocks that just completed a base and has 300% back to its old highs, these real estate stocks are like 10%, 15% away. So that's something to be aware of, right? Your profit potential in these stocks is lower, but they might be a safe place to hang out in, collect a 4% yield in some of them during a messy market. I don't hate that idea.
All right, I got one more chart for you before I got to go to my New York City escapades. Last chart, Mr. Spencer Israel, please. This one near and dear to Strazza's heart. Mr. Steve Strazza, you've been pounding the table on Solana. You love the relative strength. You've been saying for a long time, we have a lot of smart friends that are into the fundamentals of crypto, and they've been pounding the table on Solana as well. I don't know if that still means anything to you, but you have mentioned that in the past. New all-time highs, my friend, in Solana relative to Ethereum. How do we feel about this?
It's the denominator, right? Solana's not out here making new highs on an absolute basis. Ethereum just looks like a piece of garbage.
It's also not making new highs relative to Bitcoin. So I think you're spot on there with the Ethereum.
Whenever we run the relative trends, which is so important, we're always looking at different ratios. The first question I ask myself, is this a numerator story or a denominator story? And for this one, at least for right now, I think it's a denominator story. Ethereum's been bad. Solana's holding. It looks far better than most. Pretty much anything in the world of crypto right now. Like Solana's the one that looks different. I love it. However, I did sell some last week, 160 when we broke VWAP, the range high VWAP. That's where I said I'm out. Listen, my cost basis is about 40 something in this thing. It's 40% of my crypto exposure. So it's more of a portfolio call than a Solana call, but I don't mind having less Solana at this point.
Is not breaking out to new all-time highs relative to Bitcoin, but doesn't look bad relative to Bitcoin. It looks pretty damn good.
I sold Solana more so because of what's going on in the broader market. And then over the past week, I've looked at how well Solana's holding up and been like, God, I probably sold the one, but it was a allocation decision as much as anything. It's just too heavy in something that you've made a lot of money in at this point in the cycle. Takes them off the table. So I'm not saying anything bad about the technicals for Solana. It's great. I think it continues to look fantastic. And I'll probably buy that quarter back higher in the future.
There's some, just from a risk appetite standpoint, there's some weekly sticks out there setting up. Granted, it's only Thursday, but there are some weekly sticks down the cap scale. Look at Book of Meme. Look at Pepe.
How are those doing, JC? Like all the meme, are they holding as well as?
They're putting in some sticks, man. They're putting in some weekly sticks.
I got the bonk. I'm in the bonk. I still got the bonk.
I'm telling you, they're putting in some weekly sticks. So, all right, guys, Strazza, you want to go grab that? And I got one more. I got one more thing to talk about here.
Okay.
So kind of just looking broadly, I think that most investors, most people of any profession don't take enough time to think, right? And a lot of us are in a thinking man's game, a thinking man's occupation, a thinking man's endeavor. Yet we're so busy, doing our day-to-day work, family, friends, we don't just take a step back and actually think. And this is something I'm pretty sure it was Morgan Housel. Pretty sure he's the one who talks about this. Putting something in your calendar for half an hour, whatever, every day with nothing, where you can just go for a walk, anything but, day-to-day work. It doesn't mean that you're not working. Thinking is really, really an important part of what a lot of us do, especially us, but it goes beyond what we do. And I just think that thinking is underrated, very much so, particularly taking the time and making the effort to have a window for thinking about anything, right? So I've just been thinking about this market and, the lack of panic selling. I mean, I've seen plenty of panic selling in my day. And one of the characteristics of panic selling is monster intraday volatility, up and all the way down and up and all the way down. When there's real panic, we really haven't seen that at all. We really haven't seen much panic selling per se. And so that's what I'm thinking about, right or wrong. That's what's on my mind. What about you, Spencer? What do you think? Do you think about thinking?
I was talking, I'm pro thinking. I was talking about this with Alfonso this morning. What I've been thinking about this week, really since Monday, and what I love about the market is how mysterious it is. So Monday we get this like ridiculous morning, the VIX triples, panic selling, and here we are a few days later, and we're like kind of back. And yeah, there's a lot of talk about like the unwinding of the yen carry trade and blah blah blah, but like, we don't really know why. And Alfonso pointed out, Spencer, the why doesn't matter. And that is, while true, knowing the why can be very helpful. And sometimes I just want to know. I just want to know. And I see every day now since Monday on Twitter, people kind of talking like, God, what? Still scratching my head about Monday. What the hell was that about? Right. And I am too. And you're
gonna hear about a few funds that blew up.
Well, right, but we don't know who that is.
And you see it, like you'll see a natural gas spike. You're like, oh, somebody blew up. You'll see a spike in something. You'll be like, oh, somebody blew up. And then you find out a few days later who it was. This is gonna be that. It's gonna be a few funds, maybe none you've ever heard of, maybe one you might have heard of. These are gonna be they got wiped out, and you got the forced liquidations, and that's what happens with these forced liquidations,
Yeah, no.
particularly in thin illiquid markets, which is August. And margin clerks aren't putting in limit orders, Spencer. They're spraying that market.
That's true. That's true.
So just keep
Peter,
that in
I
mind.
have
So
I
you're
have
looking
never
for an answer.
read.
That's your answer.
I have never read Reminiscence of a Stock Operator. Should I?
Spencer, are you
You know
serious?
how many books I got to read? So many books, man.
I know, but that's like one of the first ones.
All right.
I don't know. It glorified.
Glorified. A
You
lot
gotta
of
read it.
a lot of those old books are glorified.
Now,
All
you
right.
got to read all of them. You got to read Liar's Poker,
I've read
Predator's
that.
Ball. You got to read One Up on Wall Street. You got to read Kramer's first book, Confessions of a Street Addict.
When I say the old books, I mean like the books from 100 years ago, right? Like those books are.
I know, but this is included in that. You got to read it. You got to read Edwards and McGee. You got to read John Murphy. I mean, this is like the more technical analysis, like must reads. You got to read the Proctor book, Elliott Wave, whether you're going to count waves or not. It's not the point. You really want to understand the dynamics of the marketplace. I mean, you got to read my book. You got to read Strazza's book one day.
I think an old one that continues to stand the test of time and just is so underrated is Extraordinary Popular Delusions and the Madness of Crowds. If you like history, that one is just so good. Just history of bubbles and crazy market madness.
The last couple books I just read, I read the Bitcoin Standard. It had nothing to do with Bitcoin. Yeah. Just stories about currencies around the world and history. It was fantastic. Really, I mean, if you hate Bitcoin, then read it because this has nothing to do with Bitcoin. I really enjoyed it. I must say, I'm a nerd when it comes to this stuff. All right, guys, listen, I got to hop. I got a busy day. You guys try not to get us canceled. I'll see you guys later. Adios.
We won't get you canceled.
Sushi.
Well, Brian Lund hop in like 30 seconds, I think. So
hit me with some earnings.
Eli Lilly. Let's just do Eli Lilly. Let's start there.
Calendar.
Throw up the chart. What are we up today? Last I looked, it was 12%. It's still 12%. Okay, so there's the calendar.
Just a second.
Eli Lilly, they blew it away. Top line beat, bottom line beat. Guidance raised. They increased their full year EPS guidance by 20%. That is a massive increase. Usually, when you see these EPS increases, it'll be like 1%, 5%, 20%. It's a huge number. They raised their revenue guidance for the year by $3 billion. Up to a range of call it about $46 billion. It's all Mongiorno, baby. That's all it is, man. People are taking it and they're crushing it. And I know the stock has gotten killed in the last month, but it's up 12% this morning. So, sheesh.
Yeah, I got nothing on that one. I mean, continues to work.
It's amazing.
I guess it's a wonder drug, so it's supposed to be.
Let's do one more before Brian. What do you want to do? You want to do Bumble? What's on your list?
Do Bumble. I'm trying to see the earnings calendar still.
It's the exact opposite of Eli Lilly. But Bumble's down. It's actually not even on my filters because it's fallen so much. Down 40% this morning. Gosh, they're wow. Revenue missed. Everything was bad basically here. Guidance was light. Every key metric was bad. If you've paid attention to the space, you know it's not a surprise. Matches looked very similar, right? They're in the same business. So
throw up the ARPU. Here.
This is the average revenue per user.
This should be yep.
Yeah, it's going down because it's hard. It's hard to
what's Badu? Badu?
What's what?
Badu. BADOO.
That I think that's a I don't know what that is. Shit. What is that? What is Badu? Badu. Wait, what is Badu? It's
another one of their brands.
It's a dating app. It's a dating app that I've never heard of until just now.
It might be one of the gay ones.
I don't know. I honestly don't know.
So that's falling apart too. I wonder what the trends, Sam, if you're listening, I wonder what the trends for Match.com and Tinder look like? Like, is this an industry-wide thing, or is this a winner versus a loser thing?
Very, remember these dating apps, they've now been around for like 10 years. Some of them, it's hard to monetize if you have a free thing, and dating apps were free for a long time, and now they're trying to monetize. It ain't so easy.
And now, from what they tell me, they're very expensive. So, big difference from what people were used to there. We were talking about, do we have the Grinder chart?
Oh, that one's definitely not on my scans.
So
that's fallen so much as well. What's the market cap of Grinder?
It's rising, not falling. Look at this thing, just stepping higher. So this is the GRND. We're talking.
It's a $2 billion company,
which is another
bigger than I would have guessed.
I guess we call it like alternative dating app, and it's just higher highs, higher lows, and it popped up for us because we were digging through the our warrants universe. No, BB, the cool thing about our show, throw up the show logo for today.
Oh,
Spencer, the cool thing about our show is that no one can cancel us. So
that's right. All right, we got BC Lund in the house. Let's bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Brian, you up on the dating app trends right now?
You want in on this conversation? I know you do.
One of the gay ones? Is that what you said, Steve?
Who said that? Who said that?
Is that your analysis?
The one of the that's the big market for that niche market.
I know. Hey, where's PJ or CJ? That guy that's usually here. It's not. Feels a lot less. A lot less.
Heard you were coming, and he got scared.
He didn't want to talk to you.
What's that?
I guess.
It feels a lot less ornery this morning.
Oh man, we've been having fun. So let's just dive right into it. Market's been a shit show. Sellers have been in control of the tape for weeks now, coming off of like epic breadth thrusts, momentum thrusts, and things like small caps, banks. Now, just not confirmation from price. What are you thinking? How are you looking at this action?
Well, first of all, let me just address a comment in the comment section. Like, I'm not a pot guy. Okay. Like a
pot guy.
I'm like a dog that gets like a bone. Like, I'm just so fixated on this bad pot call that I witnessed in 2018. And especially the people that just will not let it go. They've doubled and tripled down. So I can't let that go. That's why I mentioned pot. In terms of the market, I mean, look, I don't think you can. You look at the charts for the last 3 weeks, 4 weeks. I don't think you can see a more typical, rollover. You get these big down days. You get these very weak intraday, bounces, very narrow candles. Got wicks on the top end, and then we just roll over to the next level. It's been just textbook. So yeah, it's a little shocking how fast it happened, I guess.
Yes, the rate change has really changed in the selling.
Well, and here's the other thing is I'm a big fan of not bringing politics into your trading or investing. But to me, like it was like a week and a half ago or so when the betting odds flipped, right, between Harris and Trump. And that to me is like when I saw some of the real volatility kick in. And I think people are just underestimating how much the market may not like a Harris presidency. Again, this isn't an opinion. It's just data. Like if you look at her website, she's got a lot of tax proposals. She wants to increase corporate tax. She wants to increase personal tax. She wants to change capital gains rates to normalized, to normal income. She's even proposing like a transaction tax that we hear about. Yeah. Now look, I know people are yelling right now, she's never going to get a transaction tax. She won't. But you can't deny that if Harris wins, we're going into a higher tax environment. There's no way, no matter what she does or doesn't get through. And I think,
well, the point too is it would be higher than under Biden, a lot higher.
A lot higher. And that's the other point is, so, you look at the work, you look at the things that Jeff has done for Almanac Trader, and you look at the presidential cycles and you see what the market has done under combinations of Democrat, Republican, House, Senate, presidency. there's really not a whole lot of difference. You look at the last 50 years, under Democrats, I think the market average is 15.8%, under Republicans like 15.3. It's a nominal amount. But the problem is that all those presidents, most of those Congresses, they're like center right or they're center left. They're somewhere in that normative area of politicians we've seen. The fact is, if Kamala, becomes president, she will be by far the most progressive, the most left-leaning president. And I think that's a little bit of an outlier there in terms of fiscal policy, tax policy. Are we going to have big spending problems? I think the market's worried that we could see inflation go even higher than it was under Biden. So that's not the only factor. I was with the carry trade, and we've got
There's so many other things, though, Brian. There's
Yeah.
so many other forces at
Yeah.
play.
Of course.
Well,
I mean,
hold on,
that's what I'm
hold
saying.
on.
There's always multiple forces, but I think that's one that people are just dismissing out of hand. And I don't think we should.
Brian, I couldn't agree more. There's a comment in the chat. I want to talk more about this. Everyone is saying ignore the politics. I know they are. But the market tracked the Trump upswing, then the decline, and then the Kamala upswing. And you can't, Spencer could roll his eyes all he wants, but that has happened. Yes, we had the yen carry trade situation blow up. We had the bad ISM. We got the hard landing stuff all going on at the same time. But you can't deny that the market is moving with the election odds as well.
Steve, I like what you said a few weeks ago, when we saw the Trump bump after Biden dropped out of the race, right?
Yeah.
In the seasonality history books, let's just say that
Happened sooner.
let's just say that Trump bump sustained for the next, until the election. In the history books, that would go down as Biden, right? Because it was during his term, right?
Yeah, but we can use our brains here, and
but we won't know. We won't know in 5 years. Nobody will remember that.
Yes, we will. I will. It's my job. But the market is a forward discounting mechanism, right? So they're going to you're going to see price action that's discounting what's happening in the polls and the betting markets, right? And I think lately Kamala rising in the polls has something to do with the selling. Period. I don't know how much.
I feel like JC's being channeled in here again.
What happened? JC's being channeled. Throw up the top.
You guys get a little aggro here. Look,
all facts.
When you talk about presidents and their effect on the market, most people talk about their economic policies, and I don't think there's no way you can game that, right? And you can't. I'm not saying that this is the only factor, but when you say, okay, I want to raise corporate taxes, right? There's no way that doesn't eat into corporate earnings and profits. When you say, I want to raise the capital gains rate, there's no way this is just math here. So I'm saying it's not the only factor. We'll never know. We never do know what causes the market to go up and down. I just think people are discounting it too much as a factor.
All right. Correlation of 0.8 ain't nothing on this chart. Not nothing, certainly. It's probably enough to care about. It's a good chart, Steve.
Yeah, we do our best. All right. So, Brian, when you get a corrective phase or corrective wave like this, we talk about sellers are taking control. All of the rips are being sold and sold aggressively.
Right.
We were in a dip buying market for this entire cycle, it felt like, up until now. Now, these things I can't even get a decent dead cat bounce out of these AI stocks. That's not a good thing. So when this kind of new environment starts to present itself to you, how are you managing your trading? What is changing for you with the way that you're managing your portfolio?
Well, so I'm a big proponent, the older I get, of just not being in the market, stepping aside when things get too volatile. So when we had that big reversal day, and I put my glasses to remind myself what day it was, when we had that reversal on the 11th, right?
Yeah.
That was a day that I said to, my subscribers, I said, look, we're going a little risk off for a while, right? And for me, risk off is shorter time frames because you don't want to take overnight risk, right? Smaller position size because things move faster, quicker, and less trades. Like, you want to be pickier and choosier on what you're going to trade. But to be honest, for most people, I think it's just a good time to enjoy the summer, wait for this volatility to wash out. Even when you're trying to do intraday stuff, like sometimes I'll scalp NQ intraday. I'm seeing this thing move at 50 points at a clip, right? It's ridiculous. And so I think the best thing to do is step out. I think the second best thing is to do this, right? Think back 3 weeks ago, think back 4 weeks ago, and think about who was saying what, right? Which of those market experts were out there, right? Now, if you were on Spaces with me during that time, here's what they were all doing. They were buying everything. They're buying every dip, right? And they were telling you how they were buying, and they were telling you how now the volatility is over, everything. And think about where all those stocks are that they were buying, and think about how they've never told you they were selling, but somehow they've miraculously sold. And the point I'm trying to make is that moves like this, they just expose the charlatans in the market. They expose the people that are in the business of trading. They're not really trading. And it's important because, and this is it's a good day to have this rant without JC here, because I know exactly what he'd say. I believe it's everybody's own personal responsibility. Do your own homework. You have to take responsibility for your own trades. But the fact of the matter is, people listen to us when we speak. They listen to people on Spaces. They get influenced. And so I think we have a responsibility to talk responsibly, right? And so many of these people out here are just BS artists. They're always buying. They're always buying. They're never telling you when they're selling, what they're selling. They're never telling you their methodology for risk, right? They're never telling you what would convince them they're wrong. They'll give you a long-term outlook on crowd and tell you why every dip is still a reason to buy, because in 5 years it's going to be amazing. But they'll never tell you what would convince them they were wrong. And so I think it's a good time to reflect, especially if you've lost some money in the last 3 weeks, and maybe change who you're paying attention to, or change who you follow, going forward.
Do you really pay attention to anybody in terms of the calls they make? Like, we have some incredibly smart friends, and we're sharing their research notes and all this and that. But I feel like for a lot of us, we're in the market. We have our process. We respect how intelligent a lot of our friends are, but their process isn't ours. Their time frame isn't ours. Their risk management protocols aren't ours. So even the best research, I'll look at and be like, yeah, nothing's really influencing. We got an analyst team of 8 people, right? So if we can't do our own work and just focus on that, then I don't know what the hell we're doing with such a big analyst team. So we, for the most part, we're aware of what others are saying because it's great for sentiment, but we have all the data and we're doing all the research ourselves. We're not influenced by it. And I think that's actually helped a lot over the years.
Yeah, for us, definitely. But we're a different animal, right? We're bizarre creatures, right? They get up at 4 a.m. and check the futures, right? It's in our DNA. We speak in a language and a lingo that the average person has no idea what we're saying. I'm not talking about us. I'm talking about the casual, or the average everyday investor that tunes into a Spaces or looks at a video show or whatever. Like, they will hear somebody that's speaking authoritatively and saying, and let me tell you what the outlook for this stock, and sometimes it influences them. So I'm just saying it's important to know who you're following and to know what their agenda is. What are they really trying to do? Are they just trying to sell a service or sell themselves, or are they really putting money in the market and taking the risk that they say they are?
Because Brian, deep down, a lot of people just want someone to tell them what to do. That's it.
A lot of people in our chat have been annoyed at my bearishness. Don't take it. I'm just pissed off because I hate losing money, right? And I got some real skin in the game. So if you're not kind of upset these past couple weeks as a stock market bull, I don't know. I want whatever you're taking.
Well, now look, Spencer, I'll take the JC side now, right? So. And I'll tie it back into politics. They say that you get the politician you deserve, right? We vote for who we want. We get that person. You're right. A lot of the public doesn't want to believe, I guess, how hard trading is, right? They want to think you can roll out of bed 5 minutes before the open and just make a couple moves, and you've made 10 grand before the first hour, and then you can go surf all day, right?
Yeah.
A lot of people want to believe that, but there's a lot of predatory people out there that want to sell that, right? They want to sell the idea that it's super easy and we'll tell you what to do, and you'll just have to sit back and relax. And look, I have a service, and I don't grow my service. I don't market my service because I can't say that shit, right? I just can't do it. I tell people, look, we have a community. I'm going to help you. I'm going to direct you in the right direction. I'm going to give you some ideas, but I can't trade for you, right? And I can't tell you when and to buy and when not to buy. A lot of people don't like that. So, but again, you end up with who you gravitate towards.
Yeah, I think that's a great point.
I agree 200% with what you just said. I have no notes.
Weird times out here. What do you make of sentiment right now, Brian? I feel like people aren't freaked out enough.
Yeah, well, there's still the people are still hanging on to this is just a little correction, and it might be
Because we've
right?
seen it before. That's been the case, 2-3 times already this cycle. So yeah.
Yeah, and so what happens is I think a lot of the loudest voices on social media about the market are relatively new entrants to the market, right? They've maybe been here since COVID. Some of them after COVID. They haven't seen enough markets, right? They haven't seen enough market action to really understand it. And this is how it was when I got to the market. I had been in the market for 5 years, even 10 years. And I thought I've seen all sorts of markets, right? I mean, I was there in 1987, right? But I never saw the dot-com flash or crash. I never saw the financial crisis. I never saw COVID, right? And the different permutations in between there, the flash crashes. So I just think there's a lot of recency bias, and they're like, yeah, these things happen. They pull back 7 to 10%. You just buy, and maybe you do, right? But you never can go in with that attitude. You have to be sober along the way in real time. You have to pay attention to what the price action is telling you, what the technicals are telling you, and act accordingly, and act with some risk avoidance.
Yep. Yeah, I agree. I want to see a couple things on Twitter before I think sentiment's washed out. I want more 1-minute charts. That's a big one. Okay. We need more 1-minute charts. Dude, rising wedge patterns. I'm not seeing enough of these rising wedge patterns. I know the trend line's there. It's breaking, guys. Where are the tweets? And I need 3. Where the hell is markets in turmoil? What is going on, CNBC? Did someone tell them the data?
You said they had it on Monday.
No, they changed the name.
Oh,
It was like the sell-off or something.
They know it. You know it's bad when you start seeing tick charts being put on.
And also, we're not talking about anybody in particular here, but you're talking about new entrants to what we do. When you drill down and change your time frame when things get messy, that's a sign, man.
Well, by the way, and what I just said right there, right, the tick chart, like we all laughed, right? Because you say that to 90% of the people, I don't get it. They don't know what a tick chart is. So again, that's just another, perspective that like we talk about so much stuff that we just take for a common, I told the story. I think maybe I told you, Steve, I was taking my kids to school a few months ago, and I was listening into your technical Tuesdays, right? You, Patrick, it's Sean, everybody, and you guys are talking about stuff, and my kids are just like sitting there, right? It was like 10, 15 minutes.
Why were you doing this to them? That's torture.
Well, so it was like, I don't know. I can't remember. They're in their own world, but I was listening. And so we got like close to school, and like my son or something said, what are they talking about? Like, what are they talking? Like, you're using all these, this lingo that I'm like, yep. But to them, it was like speaking a foreign language. So
I find it hard to talk about work with my friends. I don't really do it. We talk about other things, sports.
So
I never do it.
Joe Fahmy has this great line that he told me not 20 years ago, maybe 15 years ago. And he said that when he goes to like an event that's not like a market event or something, and people ask him like, what do you do? He says, I work in an ice cream shop. Yeah, that's what he tells them. Because if he says anything about the market, then they mean, well, did you, I have this, and he's like, it's just better. And if you tell somebody you work in an ice cream shop, they go, okay, I have to go over here.
I got one of my golf buddies is one of those like right-wing doomers. Like he gets pamphlets in the mail about how good of an investment gold is probably all the time, right? So he's like
Spencer, basically. Yeah.
Ex-military. He used to do fighter jet things. Really cool.
Right.
And he's better than me at golf. He's like 65. So whenever the market like sells off big, he's one of these like the world is going to end, World War III, buy the stock Spencer buys, like the Raytheon and Aerospace and Defense stocks, whatever, hide gold under your mattress. So I'll get in the cart with them. Must be a tough day for you today. I'll be like, I'm golfing, dude. So how bad could it be? And every time the market sells off big, I get to hear his grand thesis and big story about how it's going to happen and everything's going to turn to shit and you don't want to own anything. And it's just like, yeah, you're probably right.
Yeah. Yeah. These Schadenfreude people that just, they get such joy. If you're in pain in the market, it's a bizarre reaction. We're joking a little bit about what we want to see on Twitter and stuff, but I'll tell you now, you never trade off of this, but there are definitely signs out there that you can pick up on Twitter for sentiment. And then there's also ones like, and I know people are going to laugh at this, but I've got a certain brother-in-law, right? And when he calls me and tells me he's selling everything, right? I'm liquidating my 401k. I'm like, I better start looking for some bottoming patterns, right? And it's amazing how that correlation and on the upside, right? When you get the guy that has never pays attention to the market, not into the market, and then he goes, I'm thinking buying this Nvidia. It's like, all right, I better buy puts, right?
No, I love it. So hold on. Let's talk about this bounce, right? I was asking JC earlier.
Which bounce? The 3 intraday bounces we've tried to get, or the one that's happening right now?
Yeah, right. So the chat is like talking about how great of a week. This is terrible. I've never seen such a weak, lackluster, oversold bounce. This is bad. I'm sorry, but a big red stick today. We're making new lows. Forget about
it. It was good on like Tuesday,
but it wasn't. It was good for literally like 2 hours in the morning. Every rip is getting sold aggressively, mind you, and the best stocks are going. But I want to hear from Brian. Sorry.
Well, that's what I was going back to, these so-called gurus and these guys that are supposedly killing it all the time. Every time we get those bounces, like remember last week when we got that massive bounce, right? So many of these guys came out of the wood. That's it. That was the bottom, right? And they've been literally saying that in real time as we've bounced these last 3 days.
Yeah.
And it's been, I agree with you. It's been really ugly. You look at those wicks. You keep looking at those wicks on the daily candles. Like I was going through charts yesterday to make my watch list for subscribers. And last week there were some charts that I could just kind of, if I squinted, I go, well, maybe this one's okay if we get a pop. Every single chart I looked at yesterday was the exact same pattern. It was a bounce up to a very weak level and then starting to roll over. Every single one. And look, you can wake up in the morning and find the market up 1,000 points, but objectively, if you look at that chart the night before, if you have to make a real decision, do I buy this stock and hold overnight for what happens? There's absolutely nothing in those charts. Absolutely nothing from a technical standpoint, from a putting the odds in your favor standpoint that says, yeah, I should take a shot here. You're just gambling if you're buying those charts. Really, it's a binary trade.
Let the dust settle, right? We're not saying bull market over, but the corrective wave is definitely not over. We have the evidence, right? So,
well, and I think, and I'd love to hear your take on this, because to me, the most damaging thing that we've seen in the last 3 weeks by far is that reversal on the IWM. That is so troubling to me, because it was a picture perfect breakout. A lot of power, a lot of intensity. Sat there for a few weeks and consolidated just like you wanted to see it do, and then just failed horribly and went right back into that base. That to me is concerning.
I couldn't agree more. So I do a little like macro thing on my weekly videos on Wednesdays. I spend 5-10 minutes just talking about broader market developments before we get into like stock specific stuff. All I did was show this chart because this is all you need to know about. I was on here a couple weeks ago, literally saying this is the most decisive breakout I've ever seen. And it was. I mean, this thing fired out of the base breakout zone. Incredible follow through, then moved into a high and tight range. We got breadth thrusts at the small cap level, momentum thrust in the relative trends for small caps, highest readings of all time, small caps versus tech. So much support telling us this is a valid breakout. This is why charts are hard.
Well, and
miserably since then. That's terrible. That's as bad as it gets.
If you look at that chart before it started to roll over, you could literally put that chart in the CTA handbook, right? And say forever going forward, this is your picture perfect breakout. And I said on my daily commentary to subscribers, I said, if this were to fail, it would be really, but I was so joking, right? It was like, like if this were to fail, if this breakout were to fail, it would be really bad. Ha ha ha. No.
It's really true, right? Because this was the price confirmation that we needed to come with all the breadth and momentum developments, which were incredibly positive. But just like sentiment, seasonality, anything else, they're nothing without price confirming. So price was confirming. It was looking good. We got high and tight. That continuation pattern needed to resolve higher. Not only did it not resolve higher, it got blasted lower back into the old range.
And what's even worse is, so what I thought would happen was, I thought, okay, IWM breaks out, Dow continues to break higher. we see a pullback in SPX and the Qs, but orderly, right? And maybe they go sideways for a while IWM takes the lead.
Yeah.
What we've seen is all 4 of those index / ETFs get in lockstep to the downside. So now the market is totally correlated down instead of having at least some, like I just said, like what chart? Show me a chart right now that looks good on a daily basis.
Brian, in bull markets, I was taught that the laggards, the bad ones, are supposed to play catch up to the leaders, the good ones, right? So let's think about it this way. The leadership regime was starting to change, and tech had become the bad ones a couple of weeks ago. And then the small caps and the banks and the real estate and the biotechs had become the good ones,
right?
Over the short term. Tech was selling, not just on relative terms, but absolute terms. Small caps, banks, all that stuff was doing well. Instead of tech playing catch up over the short term to the other groups, all of those groups, like the chart of small caps, played catch up to the downside, to the weak ones. That's bear market stuff, not bull market stuff.
Yeah, and we've also seen a change in tone and tenor. So for the longest time, every time we got a correction, or most of the times we got a correction, it was a correction through time, right? Instead of price, right? And you get 2 different types of correction. You get a pullback correction, or you can just get price going like this and working off the buying and selling. That's now changed, right? We're now seeing this aggressive selling. Now, having said everything that I just said there, the most important thing I think for traders and investors is not to try and predict what you think will happen, because not only is it a fool's game, but when you're convinced what will happen, your mind's not open to what could happen. And like we saw this when the market bottomed in 2022, the stocks that took off were the housing stocks, right? Nobody had that on their bingo card because everyone's like, well, there's no way they can rally because we had high interest rates, we got inflation, mortgage rate. So as much as it feels bearish, I'd say we're on a precipice here, right? Like I think if we break the 200, we get another big down, then we're probably in for some pain for a while. But keep your mind open to the fact that may not happen. And you guys have said this a million times. This is JC's cute little thing. Like, how do you know when the correction's over? Well, stocks stop going down, right? So we have to see that first, right? Then we have to see levels hold. Then we have to see the 8, the 21, the 50 get recap. It's an incremental process. And this speaks to your patience, Steve, right? Everyone wants to jump back in. It's like, no, most bottoms take time, right? And you'll see that play out in the price and in the indicators if you're paying attention and if you're open to the idea both ways. Like, yeah, maybe we'll go lower, but maybe we'll stabilize and firm up and go higher.
It's hard to do. Everybody wants you to pick a side, Well,
everyone wants to be right? So much of life is people wanting to be right. I mean, I'm that way all the time, but it's such a bad trait. I so respect somebody when you ask them a question about like, what do you think about the PMI? And they go, yeah, I don't know. Like I don't know. Like, or I need to think about that more. Like,
right.
Come back to me tomorrow when I've put some real thought. But that's not good for media. It's not good for television. You got to have someone that's got that answer right at the tip of their tongue, even if it's just something that's coming out their ass.
Yeah. So I guess the beauty of all this for us is that we can change our minds and we don't mind changing our minds. So that's kind of a superpower in times like these.
Yeah. We got to be open. Look, I mean, there's a quote that's attributed to so many different people. I think maybe Mark Twain, Winston Churchill's like, I change my mind when the facts change. What do you do? Right. And so there's nothing wrong with, like, again, I don't know why I've mentioned JC so many times, but like, he'll be like, I'm bullish on Thursday.
It's almost like it's almost like you really miss him.
Yeah, that's right. I do. It's like he's bullish on Monday, but he'll be bearish on Friday if the technicals flip. I agree with that.
100%.
Being a trader is being a person who changes your mind. That's what it is, right?
Constantly.
It's being a good human being is being someone who's open to changing their mind or their position. A trader is just the most intensified version of that, because you're literally having to make decisions and take positions sometimes on an hourly basis, right? So it's already hard. Like if you're married or you have a girlfriend, like, how hard it is to say I'm wrong, right? And you have to avoid trying to take those real hard positions. You want to be more in the middle. That's what trading is, but just, distilled down to the most intense emotional part of that, and that's why most people don't succeed.
That is such great wisdom. I love how you just kind of extrapolated that, I guess, character trait to life, not just trading, because it's so true. Your life is easier, right? And people like you more when you're
especially if you sleep in separate bedrooms, right?
Oh, I got an update on my end. So I just walked down to freshen my coffee before you came on, and we're still trying new things here with the kitty litter. Right,
sure.
So I got a new solution, which had been good for 48 hours.
Right.
It's all over the floor. My girlfriend's walking out the door to work, kind of like looking at me like knowing that's my problem. The morning coffee just hits differently when it comes with the scent of cat piss. So
we talked about that Elon Musk quote, like the biggest mistake engineers make is over optimizing something that shouldn't exist. And I think probably the kitty litter dome ecosystem thing probably shouldn't exist. But there's some guys in the lab right now saying, I know we can get it right.
So that's how I feel. I feel like they're so close. I feel like they're really on to something. Yeah. I'm not ready to give up yet.
Right.
I want to stick my hand in there. Anyway, what are you trading today, if anything? Are you sitting on your hands?
Are you crazy? Look, I'm going on vacation a week from Friday.
Nice.
So
where you going?
What's that?
Where you going?
We're doing a family vacation to Banff up in Alberta, Canada. So should be fun. And so I'm kind of in that mode, like there's nothing worse before you go on vacation or before you're going to do something really fun than fucking up your portfolio by pushing some sort of trade that doesn't need to happen. I'm sorry. Can you say fuck on this show?
Yeah. Well, yeah.
Okay.
Fucking do it.
Yeah.
I was pissed off Monday. Spencer's got me signed up to do some video at like 4:00. I'm like, there's nothing I should be doing today except why am I sitting here in front of these screens? I'm just gonna break one. No, it's really bad.
Yeah. So look, I've got a few longer term positions. I did that buy right in June on coin, which is actually so I had protection down to 180. So we're in that area, right? But it goes until December. So I'm hoping coin firms up between now and then. I've got some longer term positions I started a while back in Pfizer and PayPal, which I'm not really paying much attention to them because I think they're potentially coming out of stage one.
PayPal,
so that
trying.
What's that?
PayPal really trying here.
Yeah. And then I've got, what else do I have? I have a Palantir, which has been pretty good for me. And then, of course, a smattering of pot stocks, Spencer, for you.
Brian, we've found just over the past few weeks that you need some sort of stock specific or company specific catalyst to remain well bid in this environment. Coming out and getting involved in the ones that have just beat earnings, right? And are maybe down when they shouldn't be on earnings has been a good way to kind of pick your spots from a tactical standpoint in this market. Palantir is one of those. Knock the ball off earnings.
Yeah,
it's kind of sitting where it was a couple of weeks ago.
But it's also a reminder that comparing apples and apples. Like imagine if Palantir came out with those earnings 2 months ago, right? When the market was right. So like you can have a company that does that, but isn't it just a bad market environment at the time? And that's where these fundamental guys they lose me, right? Because it's like, okay, yeah, the numbers are great, but your stock's going down. Or, like, look at Jumia, right? I mean, so many people I know have been telling me forever, Jumia, what is it? The Amazon of Africa, it's like, was it down 52% on earnings? I mean, and there's still people out there that will tell you how the long-term prospects on that company are great. Like, all right, well, great, but you're down 75% in like 2 weeks. So.
And Brian, to your point, if Jumia, so that was on Monday, right? It was on Tuesday, Monday,
Tuesday, yeah.
All right. If Jumia had come out with that same headline 2 months ago, what 10% down, 15% down, 20%, not 50.
Hard to say. Yeah,
yeah, and look, and that just
50 though.
Probably not 50, but I mean, it just goes to show you, like, okay, are you willing? If you're a trader, you have no business being in a stock like that in earnings. You just don't, right? Because this is binary. Like, if you're a long-term person, okay, but like hedge yourself. Buy some down.
Even
what's that?
even long term, like that thing was rolling over. You could have stopped yourself out the day before earnings. The chart was
Yeah. Yeah, and this is my issue with all the pot peoples, right? Their philosophy is just like, just you wait, right? That's their risk management theory. Just you wait, right? And that's nothing.
So
You know?
so here's I get irked about this. There's some great fundamental people out there. They'll come out and say when the market is punishing a stock, right, down 10% on earnings, ignore that. Market's wrong. The report was great. What? The market is never wrong. Literally. It might be, discounting things a little bit aggressively in the moment, and then there's a little catch up. Market's not wrong. Those are the prices that you're going to buy or sell at. So the market's right. Anybody who comes out and says, I like it more, the market doesn't like it, I like it more, you got to run from those people. They don't understand how this works. They don't understand what we're trying to do here.
Yeah, and let's be clear about what we're saying here is if you're a fundamental long-term investor, you're not trying to trade, and you're buying the indexes, dollar cost averaging, you're maxing your 401k, you're buying a diversified, you're going to do fine over time for sure. But I'm talking to the people that are cherry picking what stocks they think are going to be the big winners, right? And you might be right? Everybody does that comparison. Well, Amazon was down 99% at one point like that. But what about all the stocks that were down 99% that just went away, right?
That's
and so when you were taking that like just you wait approach, okay, that's fine. But if you're only picking 3 or 4 stocks and you're putting a lot of your concentrated funds in it, what if 2 of those ones that you're picking don't come back over time? So that's I think what the rub is.
If you're playing that game, maybe be in the indexes.
Brian, wait, before I let you go, you're in Newport Beach, correct?
Yeah.
I'm in Huntington Beach, which
Damn
is
it, I always forget that. All right.
It's one city up from Newport, and
All right,
you're in Newport, right? Or you're coming to Newport, right?
I'm going. I'll be at Lido House on Saturday
for a
Yay or
wedding.
nay?
For a wedding, is that what
Yeah.
you're? Yeah. Yay or nay? The Lido House is a pavilion. It's that kind of overlooks the bay. So what's the yay or nay on it?
I'm asking if it's like, I don't know what I'm asking. Is it like, am I going to be impressed? Like,
So if you're where I think you're at, it's kind of the go-to for everybody that has events there. It was built in like the 1920s, so it's got that old school look. I haven't been there for a number of years. Like one of my high school reunions there, hardwood floors, but it literally just overlooks. It's like on the water, so it overlooks the bay. So it's got a beautiful view, but it's not like if you're looking for like moneyed. Impress, go to like Fashion Island, which is where the PIMCO headquarters are. There's a lot of other places in Newport that are like moneyed. This is kind of old school Newport, but it's fine. It's fine.
I like that. All right.
Below Brian's line.
Thanks a lot, Brian.
Before we let you go, Brian, today was great. A lot of comments in the chat said this is the best interview we've done yet. That's incredible.
Wow, that's very kind. I appreciate that.
Apparently, we are real people. So sign up, drop a link to the Lund Loop here if you want more real people commentary. You always get that from this guy. Excited to see you next month. We'll be hanging out.
Yeah, at Future Proof, right?
It's Oktoberfest too.
Yes, yeah, and I'm going to be
October.
There's they say the rarest thing in nature is a unicorn, but rarer than that is me being east of Vegas. I'm actually going to be in New York City in September.
When in September?
I think it's actually the week that leads up to Future Proof. So it's the Wednesday before up till that Monday.
What in the world is bringing you to New York City?
All right. So look, you say I'm a real person, so I'm going to be real here. I am a massive Twilight Zone nerd, right? The original Twilight Zone. Yeah. And it's the 100th anniversary of Rod Serling's birthday. And
wow. That is nerdy.
I know. He was born in Binghamton, New York, and so they have something called Serling Fest up there for 3 days. They're going to do they're going to dedicate a life-size bronze in the park that he grew up in. So I'm going to go up there and do that, and then I just build a couple days around to, I'm going to try to see Perlman, and maybe Jay Woods will get me down to the stock exchange. So it's been a long time since I've been in NYC. I'll tell you that.
Oh, that's so good. Okay, a couple Twilight Zone questions because I love it too. What is the best episode?
There's so many. And look, I know everyone thinks it's the 20,000 feet one, and or
That's the one on the plane. That's the one.
yeah,
That's what I was going to suggest. William Shatner.
or walking distance, right? Or to serve man. That's the one where the Canaanites eat. They take him to another planet and eat him. I like the one called The Lonely, which is in the first. It's one of the first 4 or 5. You got me on the spot here. I have to get back to you. There's so many that I like. It's hard to pick one. And the thing about the Twilight Zone is you have to compare it to itself, because it's already like the worst Twilight Zone is better than. They just had this big list that was going around the internet recently about the greatest TV shows of all time. The only one that was on there that was done in over 25, 30 years old was the Twilight Zone. It was number 10. This thing came out in 1964. Okay, that's how great this show is. So.
God, you're such a nerd. I love it. Hey, did you say this event is in Binghamton?
Wait. Is that Sean? Did I get Sean?
Oh
my God.
Oh yeah. Did you say this event is in Binghamton?
Yeah, Binghamton, New York. Yeah.
Okay, so yes, it's clear that you don't get east of Vegas very long or very often, because Binghamton is not New York City, not even close.
Okay, I think
New York City. I assumed.
I'm flying into JFK, which I know is in New York City. Okay, I'm going to spend some time in NYC. I'm driving 3 hours. I have a map, Sean.
You're driving, dude.
Got it.
We're close to airports, my friend.
Yeah.
Yeah.
You're going to be from New York City to Binghamton. You're going to be replacing people with cows. It's a very big difference.
So first of all, I already talked to Patrick, who's from that area, right? He gave me the lowdown on where to fly into, what would be best, blah, blah. Number 2 is I love used bookstores. So I've already got my bookstores mapped out between NYC. I'm going to see Perlman, who's halfway there. Like, I figured this out, Sean. Okay.
Patrick told you that JFK was the ideal airport to fly into. Patrick spent like literally the entire day, 12 hours sitting in Newark Airport yesterday. So he doesn't do the best when it comes to flying.
Yeah, well, now you tell me, Steve.
You should have flown into Newark is what you should have flown into.
Yeah, but I want to be in NY. I want to be in, like I said, I'm going to go to the stock exchange. I want to see some people in. So I want to do both, right?
They're all equally a pain in the ass.
Thanks for reminding us, all of us, Brian, that you are our special kind of nerd. We love it. It's great.
You're a special friend.
I didn't think that the Twilight Zone would be the thing that would provoke the most interaction on this.
I mean, I thought you had it in the bag with the whole separate sleeping thing, but now you dropped this whole Twilight Zone. I mean, you've raised yourself a level.
Like Steve says, I'm a real person. What can I say?
So my favorite is the monsters on Maple Street.
That's a great one. That's a great one.
Madness of crowd situation there. People are fucking losing their minds. They don't know what to do because they don't understand something. That one's really excellent.
The Monsters Are Due on Maple Street is a top tier one. And there's another one that has the same crowd mentality. It's called The Shelter. And it plays off of the Cold War fears. Then like there's like 4 couples that are having a dinner party. They hear a report on the radio that maybe there's some like missiles there. They don't know. And only one guy has a shelter. Right. And so it's the dynamics of what you do and how you betray friends. And it's really good. It's not as good as Maple Street, but it's got that same crowd mania thing to it.
One more question about it. The new Twilight Zone that they've done. Yeah,
there's no other Twilight Zone. Twilight Zone ended in 1964, and as far as I know, there hasn't been another one.
So you haven't even dabbled. You didn't try to watch the one that the guy did.
Let me ask you this: so the Twilight Zone is literally Rod Serling.
I know.
Right?
It's not
he wrote it. He wrote most of them, produced it. He died in 1975.
Yeah.
Anything else that you're just slapping a name on it? Like who's the guy that Jordan Peele that did it? Right. He's a good guy. I like his stuff, but why not just call it the Tampa Show? Like, there's nothing about the Twilight Zone except the creepy music.
So it's less Twilight Zone, more Twilight area.
Okay, so Brian, how do you feel about Black Mirror?
I've heard Black Mirror is the new Twilight Zone.
How do you feel? You haven't seen it?
Haven't seen it. No.
All right.
Should I see
you
it?
May like it.
Okay.
You may like it.
But it's Black Mirror. It's not Twilight Zone. It's
Correct.
Black Mirror, right?
But it's better than the fake Twilight Zone that Jordan Peele did.
I wouldn't know because as far as I know, there hasn't been another Twilight Zone since '64.
I mean, it's hit or miss, but the hits are really good. The hits are really good.
On Black Mirror?
Yeah.
Okay. Cool.
So check it out.
I love watching television. It's like a guilty pleasure of mine.
Now I'm going after the Twilight Zone thing. I'm going to an ALF convention, and that will be
what?
I'm just kidding.
Brian, we love you, buddy.
I don't really have anything else to say about anything.
Can't
today.
wait to see you next month, buddy. Or
Yeah.
no, 2
Are
months.
you
I'll
gonna
see
be
you in
at
October. I'll see you in
Yeah,
October.
you're going to be at Stocktoberfest, right? Okay. Yeah.
Yeah, I don't know what Strazza thinks. I don't think he's going to Future Proof. We have an event in Chicago like the next day.
Yeah.
We would be there, and I actually told some guys that you would be there too. We're flying directly from.
All right, I'll be there if there's a reason for us to be there. Like if we have to do something, sure. But otherwise it's just too much travel for not a whole lot.
There was no reason for you to be there last year, but you wanted to be there, so I just assumed.
Hey, no, let me dial it back. I love going.
Why is that?
I love going, but their event is Sunday, Monday, Tuesday, and we got to be in Chicago Tuesday through Friday. So
No, Wednesday through Friday.
well, I'm going in Tuesday. I already booked my
All
flight.
right, fine.
And I won't be there. I won't be there Sunday and Monday because I'll be in Binghamton. So
For the Alpha and the Twilight Zone, right? Okay.
yeah, that's right.
All right.
Guys, if we're doing our podcast there, I'm in. I'll be there. You just tell me.
All right. Thanks a lot, Brian.
Yeah, thanks for having me, guys. Appreciate it.
Bye, buddy.
Damn.
All right, we going to talk options now?
He hung out for 50 minutes.
I know.
What
So
a guy.
generous.
Time.
What a guy. You guys
Also-
were talking about things, or?
I just have one thing to say real quick to bring it back to trading, just because that's why I'm here, right? As the options trader, there's been a lot of talk about, this high vol environment. And Strazza, you and I talked about this in our analyst meeting yesterday, so you know what I'm going to say. But for everyone else, there's been a lot of talk about this high vol environment, about how we want to be selling premium because volatility is so high. And I know that's a very sexy idea when volatility is high. But in this environment, it feels a little bit dangerous. It feels a little bit slippery. It feels like we could have a big move in either direction at any moment, right? Up or down. I'm not making a call that we're going down more, but I think the better play as options traders right now, if you want to make a bet that the worst is behind us and we're about to go higher, or at least get a dead cat bounce, instead of selling puts, which define your upside, I would rather buy call vertical spreads, that where you're buying an out of the money call and selling a further out of the money call.
Yep.
For two reasons. Number one, if you get the turn right, you'll make more money.
Yep.
Number two, if the worst is not behind us, and if we're going to have another leg down, well, guess what? Volatility once again will rise. We probably won't see a 65 on the VIX again, but we will see volatility rise once again. And in that environment, we may be wrong on the direction, but a long call vertical spread is a long volatility play. So volatility will rise, putting a bid in the call options that we're long. And so, yeah, we'll lose money on that trade if we get the direction wrong, but the losses won't sting that hard. In fact, I've had a few trades this week that I've gotten out of that I was dead wrong on them, but the losses weren't that bad because they were long call spreads and the premiums were so juiced that I lost far less money than I thought I would have lost in a normal market environment. So I know a lot of people are saying, sell puts. Yeah,
No.
You can do that. I don't think this is the right time right now. I think call spreads are the way to play it if you're playing for a turn here.
Yep. And I do agree. You know that I agree. I think you cannot sell puts in this environment. I don't care how much money you will collect. It's a good way to not survive, right? You sell puts on the wrong thing right now, you're going to get blasted, and it's going to be the worst decision that you've made this whole cycle, and you're going to give back a ton of the gains that you've already made. That's just not what we're trying to do here. I will say, right, because I agree with you on the vertical call spreads. The only way that doesn't work and you wish you sold a put spread instead is if these levels just kind of hold, but there's no upside, right? So we hold the lows here and we start in this kind of volatile environment. We're either blasting through those lows and breaking them, and the put spreads are going to be terrible, at least limited, but selling naked puts, you're going to freaking blow yourself up. Or we're going to dig in and rip higher and get some, sick short-term counter trend oversold bounce. And then you're going to want the call spreads. So the scenario where you'd prefer to be in the put spreads than the call spreads, I think is very low probability, right? That we just kind of sit here and hold these levels. We're going up a little or we're going down a little right now in this kind of market, I think.
Yeah. Hey, I see Tommy Lackey in the chat. He's agreeing with me. My work is done. I did good work. If I got Tommy Lackey agreeing with me, then I feel good about things. All right, Tommy. Thanks for chiming in.
So I'll just say right now, the way things look out here, I wouldn't be surprised if we make new lows today.
I would not be surprised either. I'm not, I could be wrong. Look, I've been wrong a lot in the last few days on just, my market feel has been a little bit wrong. I day trade some Q options and I've been wrong, but it's been a market where it's been okay to be wrong if you're long gamma, which I have been. But boy, this is tricky tape. And we talk about this all the time, Strazza, right? Bear markets, yes, you can make a lot of money in a hurry if you're on the right side, but they are tricky to trade. The moves in both directions are so fast. Yeah. You got to change on a dime, and it's hard. And if you're out there struggling in this tape right now, believe me, you're not alone. You're not alone.
So I'm actually, let's hit the recess. This will be good for recess.
Sure.
It's a good transition. So Sean was just saying how bear markets are no fun, hard to make money in. A lot of times you end up giving back some of the money that you made in the bull market. At least that's been my experience. So what's cool about what we do is we don't have to participate if we don't want to. So during bear markets, I just do a lot less, almost nothing. I think Brian Lund would almost agree. He has a similar approach. I think you can understand, why someone might do that for sure. It's just a different game. You have to trade on the bear side. You have to trade downside differently than trade upside. It's just not something that I ever figured out. And frankly, I don't think I need to, because if you make enough money in the bull markets, then you just survive through the bears and you do it again. Or you find a trending market. Maybe crypto's trending, commodities are trending. You go have fun with that, right? Whatever. But what I'm doing lately, because I think we're at least in the later innings now, it's been a nice bull market, I'm hobby shopping. So if anybody has good ideas,
hobby shopping.
I'm hobby shopping. Yeah.
So you're just open for any new hobby.
I can't play golf more than 3 times a week. It's very expensive. Very expensive. So I need something.
What do people down there in Florida play? A little shuffleboard, maybe?
You know what I was thinking, Sean? There's only one court. I was thinking of getting into the pickle.
I was going to say, man, it's a really easy hobby to pick up.
I'm thinking of pickling. So one of my golf buddies was like an old tennis star, and he's into the pickling now. Maybe I'll just hop on that. I don't know.
What about surfing? Is there surfing down there in Key West? I don't know what the waves are like.
Sean, I don't know if you remember this. It's been a while since you've seen me. I know I've lost weight. Thank you. Thank you for this kind compliment. But my body, not really for surfing. I also have asthma. And I've tried it before, and it's exhausting. I will have an asthma attack and drown.
Okay.
All right.
Yeah, that does happen. I've heard of that happening before. So yes, maybe you should stay out of the water.
No, I can't do that. I don't even want to fish. Anyway.
No, unfortunately, Alex, we didn't get to hardly any of the earnings reports that are on our list today. We didn't get to Robinhood. We didn't get to Disney. There's a lot, but there will be a show tomorrow. So maybe tomorrow.
Hold on that point. Shout out D.A. Davidson. Came out with the Robinhood upgrade.
And this is great. Yes, this is great.
Price target hiked to $82. It's like 350, 400% of upside. Okay. You never see someone stick their neck out like this on the sell side or anything on Wall Street, right? And make a big call like that. I know they have a technician working for them because they're basically setting the target at the old all-time highs. And I love that. I think that's the way to do it. You invest.
And as a reminder, sell side price targets are almost always 52 weeks out. They're saying 52 weeks, we think that's the price.
I could wait 52 weeks for a 4x on my money. That sounds great.
Yeah.
Fantastic. Shrimp check.
My recess was just shout out to Quincy Hall and Cole Hawker. Oh my God, guys, if you did not see the men's 400 meter or the men's 1500 meter in track and field at the Olympics yesterday, go on YouTube, watch the replays. 2 of the most epic comebacks you'll ever see. What? The Americans. Quincy Hall won the 400. Cole Hawker won the 1500. Cole Hawker was not supposed to win. They were both losing, and they both came back at the end, separate races, to win. It's unbelievable.
The best part about Hawker's win is that right up leading up to that race, all they were talking about were those 2 other guys. The guy from Norway.
They were talking shit. They were talking shit.
Talking about their rivalry and how they're talking smack, and one's bragging about how the other's going to win, and it was all about those 2 guys. And then this Hawker guy, who no one's talking about, sweeps in the last
the Miles guy,
50 feet and wins it.
The Miles guy was supposed to win. What's his name?
No, not the 1500.
Oh, okay.
Lyles.
Lyles, yes.
Yeah, Lyles. No, that's the 100. But yeah, watch. If you haven't seen it, go on YouTube, search men's 1500 and men's 400. And it was amazing. It was awesome. It's just amazing.
I'm with you. I was watching that too, Spencer. It was awesome. It was very exciting.
All right. It's Thursday. We got Chart Request live at 1 o'clock. And Sean and Steve both doing stuff for their members today. So
we got jam session today. Jam session at noon.
Jam session at noon. Breakout multiplier. Weekly strategy session at 11 in an hour, actually. So that's what we got. Thanks to Brian for hanging out. Thanks to all you guys for hanging out. We'll be back tomorrow with a brand new guest on the show. It's Akshay Shindekar who'll be on the show.
All right, hot new guest. I like it.
Yeah, so that'll be fun. Drop us a like. Thank you very much. Go make some money. We'll see you later.
Bye, everybody.